suppliers' secondary sources of credit. Mr. McCusker.
Chairwoman Velasquez, Chairman Frank, Ranking Member Graves, Ranking Member Bacchus, and members of the Small Business and Financial Services Committee. Thank you for the opportunity to testify today on behalf of the National Association of Small Business Investment Companies regarding the state of small business lending. My name is Charles McCusker, and I'm a founder and managing partner of the Patriot Capital family of investment funds. Patriot Capital holds 3 small business investment company licenses. Non-bank lenders such as small business investment companies, or SBICs, are an important and often overlooked part of the small business equation. Patriot Capital, for example, has provided investment capital, long-term investment capital to 64 businesses, small businesses, and the Patriot Capital portfolio companies employ over 10,000 people in 23 states. 17 of these investments have been made since mid-2008. 6,000 of the 10,000 people we employ, jobs were created as a direct result of our investments. SBICs are very small, highly regulated private investment funds that invest exclusively in domestic small businesses, primarily through long-term capital investments. Under the program, SBIC funds raise private capital from institutional and individual investors, and upon licensure from SBA, can access low-cost leverage to multiply the amount of capital available for small business investment. The program is getting capital to the market. When the Treasury and the Small Business Administration held a summit on small business financing in November, the only small business participant at the Small Business Forum who said he had adequate access to capital was a small business investment company-backed company. At Patriot Capital, for example, we have a recycling company in the Midwest that has struggled but survived the economic downturn, met every expectation that they laid out to the bank, and yet the bank continues to reduce the amount of credit available to this company. And while debt capital would be available if the company were a larger scale, small businesses like this recycler are having serious problems accessing capital. Patriot Capital provided capital when the bank would not. SBICs can and do fill the capital void in the marketplace. SBICs function in a symbiotic relationship with the banks. Banks are not competitors, but are major investors in our funds and are sources of daily credit for the businesses in which we invest. SBICs fill an important and unique role in providing capital to small businesses. SBICs generally provide long-term, non-collateralized investment capital in the $500,000 to $5 million range, a range in which banks often are not comfortable lending, particularly smaller community banks. SBICs also invest in small businesses which, despite being solid companies, have collateral considered too risky for banks to consider worthy of credit. In addition, in fiscal year 2009, SBICs made over 20% of their investments in low and moderate income areas, and over 90% of investments held by SBICs were in smaller enterprises. Furthermore, related to banks, banks are often more comfortable lending to small businesses with SBICs as long-term capital investors. Patriot Capital has businesses in multiple industries, and very few are immune to the current lack of liquidity in the marketplace. Several very solid, well-managed companies in our portfolio, from the Midwest paper recycler I mentioned, to a southeastern trucking company, to a woman-owned and managed East Coast telecom manufacturer, to a rural provider of natural gas, would have been put out of business and liquidated by their banks if not for the SBIC program and the capital we can bring to support these small businesses. In approximate numbers, these 4 companies alone represent over $100 million in revenue and 600 American jobs. These may not seem like large numbers, but they are huge numbers to their employees and their hometowns. Also, when you consider that these 4 companies represent only 4% of our portfolio, and Patriot Capital, while collectively one of the largest SBICs, is only 2% of the program, you have to multiply those numbers by 1,000 to understand the impact. 600,000 American jobs impacted by SBICs. Stories like this can be told by every one of the SBICs in the marketplace. It is definitely a fact that it is faster and easier to save and create jobs in a solid small business than to create them from scratch. Recent actions by and proposed actions by banking regulators and the administration are cutting off capital to SBICs and small businesses. The day after the President proposed the Volcker rule, many banks suspended investments in SBIC formation. Even before Graham Leach Bliley, banks were allowed to invest in SBICs. A clear message needs to be sent to banks that they are not only allowed but encouraged to invest in SBICs. Also, recently, inexplicably, banking regulators, particularly the OCC, have inadvertently cut off new investments in SBICs by removing certainty that banks will receive CRA credits for investing in small business investment companies. There has been no legal or regulatory change, but the actions of a few examiners are cutting off capital to small businesses. CRA credit for SBIC investments needs to be explicitly memorialized. On the incentive side, the $30 million TARP capital, if just 3% of that were allocated to community banks to invest directly in SBICs, that capital can be leveraged by the SBA and in turn invested in companies for providing long-term investment capital. Finally, we do encourage
The gentleman's time's expired.
thank you for the opportunity to testify today, and I will open any questions.